Good morning, good afternoon, and good evening, friends. Let's get into the further questions. And we are into self-examination questions on accounting for incomplete records, accounting from incomplete records, standard to accountancy. We're in self-exam. We have done with the illustrations, and now we'll go to the self-examinations questions and then further exercises. Okay. So today we'll cover the multiple choice answers, multiple choice questions, and see why the answer is relevant. The first question. Incomplete, choose the correct answer. Incomplete records are generally maintained by company, government, small-sized sole trader business, multinational enterprises. The right answer is small-sized sole trader business. Why is companies normally maintain accounting in double entry system? For answer C, small-sized sole trader business. And government normally maintains accounts in a traditional way, and multinational enterprises obviously they maintain it in the maintain supporting documents and transactions and journal entries, ledgers, trial balance, balance sheet, everything in a proper form, in a double entry form. And small size sole trader business generally does not maintain the accounts in a proper form. So incomplete records are generally maintained by answer C, small sized sole trader business. Next question. Statement of affairs is statement of income and expenditure, statement of assets and liabilities, summary of cash transaction, a summary of credit transactions. The right answer is answer B, statement of assets and liabilities. It does not include all the income and expenditure, but it includes all the assets and liabilities to identify what is the capital of the business, right? It includes cash as well as credit transactions. What are all the things that comes into the mind of the sole trader? Everything goes into this, and it's part of the statement of assets and liabilities. The third one, opening statement of affairs is usually prepared to find out answer A, capital in the beginning of the year. That is where the opening statement of affairs comes in. It's not used to answer C is not right because it is not used to calculate the profit made during the year and loss occurred during the year or capital at the end of the year. No. Opening statement of affairs is usually prepared to find out the capital at the beginning of the year. Next, fourth question. The excess of assets over liabilities is, this is what basics what we studied. Capital is equal to asset minus liabilities. So the answer is answer C, capital. Capital is the excess of assets over liabilities. That's the first formula what we saw when we started with the accounting for incomplete records. Next question. Which of the following items relating to bills payable is transferred to the total creditors account? So total creditors account from bills payable, what is that we identify from bills payable? Bills paid during the year, bills honored during the year, bills dishonored during the year, and new bills created during the year. That's what is. And new bills are created. When we create a new bills, the journal entry what we process is sundry creditors account to bills payable account. So the answer is relating to bills payable is transferred to total creditors account. It's bills payable accepted during the year. A creditors converting the amount due into bills. That is transferred to the total creditors account. So answer is C, bills payable accepted during the year. Why the opening balance of bills payable does not move into sundry creditors, similarly closing balance of bills payable doesn't move into the sundry creditors. Remember, we show bills payable as an end balance in the balance sheet also, right? And you can see here this previous summages here. Bills receivable is shown separately. Similarly, bills payable will also show separately in the capital and liabilities account in the balance sheet. So bills accepted during the bills payable accepted during the year will get transferred to the sundry creditors account. Next, question 6. The total amount of credit sales can be computed from total debtors account, because total creditors account or bills payable account deal with suppliers or the liabilities amount that needs to be paid, and bills receivable account deals with debtors converting into bills receivable during the year, right? The total debtors account shows what is the total sales, credit sales during the year, right? So answer is A, total debtors account. Next question is 7. Which of the following statement is not true? Is not true in relation to incomplete records. It is an unscientific method of recording transaction. Yes, it is true. Records are maintained only for cash and personal accounts. Yes, definitely yes. It is suitable for all types of organization. No. Answer is C. It is suitable for all types of organization. It is not suitable for, what is option 4? Tax authorities do not accept. Yes, tax authorities do not accept. So A, B and C are true. C is not true. It is suitable for all type of transactions. No, it is not true. What is the amount of capital of the proprietor if his assets are 85,000 and liabilities are 21,000? So answer C. Assets is equal to 85,000. Liabilities is equal to 21,000. Capital is equal to assets minus liabilities, which is 85,000 minus 21,000. That is equal to 64,000. Answer D. Ninth question. When capital at the beginning is 10,000 and drawings during the year is 6,000, profit made during the year is 2,000 and additional capital introduced is 3,000, find out the capital at the end. We have to identify the adjusted closing capital and then do this. So what are all the things that we have here? We have this formula here, right? We captured the formula here for calculating the adjusted closing. Let's put that in, because format makes a lot of difference, as I was explaining, friends. I'm just trying to copy the format. Yeah, so here, just trying to copy the format here so that what are all the things that we have here? Closing capital. When we have the capital at the beginning of the year is 10,000, right? We have drawings of 6,000. Profit made during the year is 2,000. Additional capital introduced during the year is 3,000. We beginning is 10,000, drawing 6,000, profit made during the year is 2,000, additional capital introduced is 3,000. Find out the amount of capital at the end. We have to identify the closing capital, right? Let's back work this. So closing capital is equal to profit plus opening capital, profit plus opening capital, right? This will give adjusted closing capital, right? Profit is 2,000 is equal to 2,000 plus profit made during the year is 2,000 plus opening capital is 10,000, right? Yeah, 10,000. So this is adjusted closing capital. From adjusted closing capital, add drawings. Sorry, from adjusted closing capital, less drawings. What is drawings made during the year? 6,000. 6,000, right? Then we have to add opening capital. Sorry, we have to add additional capital. What is additional capital? 3,000. So closing capital is equal to 9,000. Answer A. Pretty much simple. We have to just backward copy the format and then start back working on it. Profit plus opening capital will give us the adjusted closing capital. From there, we have to list the drawings and add the additional capital introduced that will give you the closing capital for the year. Right? So, moving to the answer, moving to the question 10. 10. Opening balance of data is 30,000. Cash received 1 lakh. Credit sales 90,000. Closing balance of data is. So, let's calculate the total data. Copy the format for ledger for data account. Students, the format will help us a lot. So be sure that you copy the format when we prepare a ledger for data account. What are all the things that we have? Opening balance of data is 30,000, right? And cash received is 1 lakh. Cash received is 1 lakh. And then we have credit sales of 90,000. Credit sales of 90,000. Then what we have to calculate is calculate the closing capital, closing debtors account, right? Opening debtors, cash received, and the credit sales. Calculate the closing balance of debtors. Closing balance of debtors is equal to 1,20,000 minus 1 lakh. Answer is 20,000. Answer D. Hope you have understood this question, students, and please practice this again. Let me know for any questions or clarifications. In next class, we will go through the exercises again. Okay. Thank you, friends, and have a great day.